What's going on, everyone? Welcome to episode 2 of Quick Tips Season 4. I really hope you guys enjoyed the rule of 3. I know that episode is going to be a game changer for a lot of you, so hopefully you guys took a ton of value from that. For today's episode, I'll be giving you guys full coverage on what are the zones. So we often refer back to when we make content, where are we within structure? And this highlights that perfectly. So it's a concept that can be overlooked by some, or for some people they dive right into it and really get a good explanation of where we are within structure. And I think it is probably one of the most important things to understand to gain consistency, and not only to gain consistency, but to hold on to that consistency. Knowing where we are within structure and applying things like the rule of 3 and understanding which entry to take, where to wait for those larger developed flags, where to be hesitant and hold on to that capital is very, very important. Understanding where to apply patience and where to execute without question is, like I said, very important to your own trading. So that is what we'll be covering for you guys today. And even speaking from my own personal journey, this is something that I put a lot of focus on when I originally transitioned over. And this was very beneficial in order for me to gain a lot of momentum with the strategy early. Start building that confidence, get the results under your back, remove those invalid or very, very valid entries, and understanding where to take the right entries and where to be patient. This, you guys know from all the content that I've provided, that patience is probably one of my strongest suits, and I feel like understanding this concept is very, very key to applying that. So without further ado, let's jump to the charts and take a look. Okay, so you guys can see here from this drawing that I've done up is that this is a picture perfect example of what I would think the zones would look like. This is where you can apply everything that you've learned and understand where we are within structure. So let's just cover this quite quickly. Okay, so we have the green box, which is obviously good. Green is good. Green is where you want to be executing your risk entries, your 15-minute continuations, and most importantly, where you want to be applying that rule of 3, which is the process that you have just previously learned. So that is the green zone. Now, as we push down, as you guys can see here, we start to become in the middle of this structure here, of this larger ascending channel. And you can see here, this is where you'll start to apply that patience. This is where you need to start to use your experience and understand that, okay, I'm not going to just take any 15-minute flag here because we are out of that green zone. We are now, the market has now impulsed and it's given confirmation. Typically, this is where larger flags will be formed, things like the Falcon flag and things like that. So keep that in mind. This is the amber zone just here. Now, below the amber zone is the red zone. Now, this is where I've dealt with a lot of people on coaching calls and things like that, where they think they're taking very, very high probability positions because it might have a 2-touch or a 3-touch 1 hour pattern in that area, very, very quick, or even a 15-minute 3-touch. But where we are overall within structure is very detrimental to that position because, as you can see, the green zone's gone, the amber zone's gone, and now we are trading directly into this somewhat negative confluence, which you guys can see, which is this area just here. So this is a very, very brief and perfect example of what the zones would look like. Now, what I guess for you guys to highlight and take notes from is green is where you're going to be looking for your risk entries, where you're going to be looking for any kind of impulse 15-minute continuation, or to put it simply, this is where you want to be taking majority of your entries. Now, as we move down to the amber zone, like I said, this is where a little bit of patience can be required. If there was just a big impulse and then 6 15-minute candles right in the middle of structure, all the way pushed down, that is where, for some people, they might be happy to take that, and that's absolutely fine. However, as we know through backtesting and ASR and things like that, typically you get the larger developed flag. So personally, as we push down into this amber zone, this is precisely where I'll be waiting for those larger flags to develop. So a slight more patient approach in terms of where we are within structure and letting the market show us its hand into what structure we'll be developing at this time. Now, as you can see, if we push down from that amber zone, we'll now be entering the red zone. And this is where, like I said, this is where you want to kind of be avoiding those 15-minute flags, those really, really tight 1 hour flags, and applying a lot of patience in this area. This is where risk management is very, very key in holding on to that capital. Like I said, if you cannot get 1% towards the bottom of this confluence here. So in this case, it's the upward sloping ascending trend line that you guys can see here. A lot of people take a short position here, get tagged in, tagged out, and then that's their quick loss. So in this type of positions, and I'll be covering through multiple examples with you guys in terms of live market, this is where you want to be applying patience and waiting for that larger developed evolved structure or a full push down, breaking that low, and then be looking for flags and continuations to the downside. But overall, guys, I really want to break down some actual examples with you. So let's jump onto the charts. Now, if I just slide up here, there's a really good example just above here on euro dollar. So if I zoom out quite far, this is obviously the 1 hour time frame, but the structure is what we want to be taking note of here. So you can see daily wise, we'll have a 1, 2, 3, and then we have a descending channel within that structure. So we have patterns within patterns, which is obviously very good. And these are the type of areas that we want to be trading from. Now, zooming in a little bit further, you can see here. Now, if I was to highlight the zones in terms of where I would want to be taking my risk entries or flags, you guys can see here clearly, this is the green zone right here. So as you can see, applying the rule of 3, we did have that impulsive leg down. So automatically that should be you guys waiting for either a push up 15-minute continuation, or you count this last leg here as quite corrective, and then you'd be taking the larger risk entry. Either way, honestly, is absolutely fine. That will come down to your preference of style and preferred entry on that particular pair here. But as you can see, we exploded to the upside, and then we didn't give any kind of nice flags in this area here. However, if we were to have given a 15-minute or a 1 hour flag, then that's absolutely perfect. A nice tight flag there would have been suffice. Now, as we push up to this amber zone here, what makes it amber? Well, the thing is, we are now trading into this negative confluence factor here, which is 1, 2, 3. So we know that we can evolve structure and that we can pattern separate, and this can actually be the flag here, which is absolutely fine. Again, this is just more of a valid entry, but still a decent entry. And that's what I was saying. You have two choices when you come into this, where with the green zone, you kind of have, no real negative confluence that you're trading into. So as long as you get the entry that you require, you're happy to take that. For this, we could still develop into this larger flag here and properly evolve the structure. As you guys can see, we'd have had something like this, or we could have pushed all the way back down for a double bottom and then exploded to the upside there. So make sure you guys are understanding the flip side of the bias to the position that you're looking at. If you can evolve it, or if you're happy with the flag to take that, what could possibly be a tag in, tag out, and then larger flag form, then that's absolutely fine. But again, this is a great example of why we call it the amber zone and why there's patience required here, because of that negative confluence of trading into here. Now, when we move up to the red zone, in this case, the red zone could be all the way to the top of the structure here, but you guys can see price actually never made it that far. And the reason being, we have this 90% rule here just as well. So you can see as soon as, and I encourage you to look back over all your positions and things like that, you will see this time and time again. Just look at the price action difference from here to here. And the reason that is because where we are within structure, it's very hard to time a position within this structure here, because you can see how messy, choppy, and corrective that is, because we are not where we want to be within structure. We are pretty much in the middle of nowhere, so it's very hard to pinpoint the exact bias. But when we are at key inflection points like the green zone and sometimes the amber zones, depending on how price action forms, that is precisely where you want to be pulling the trigger on those. So that's a really good example of a long from euro dollar in 2019. If I just flick over to euro pound, I have many more examples to give you guys, and also want to run through some live examples as well, just to give you guys some proper forecasting and things like that. So overall, euro pound, we have this larger daily double top. If I zoom all the way out in the 1 hour time frame, you can see going back quite far that there is a double top at this area just here. So as we slide back to the example, so we know that that is a key inflection point. So what do we need to see in order for price to approach that level, in order for us to take risk entries or flag entries or really any entry at all? We need to see how we approach and how that last leg forms. So you can see, even just looking at this larger structure here, we have 1, 2, 3. So overall, a very good area of value with a larger structural approach. You can see this last leg is very impulsive. So what would that require? A retrace, 15-minute continuation, and then that would be enough for me personally to take an entry, because I like the overall inflection area. So again, if you would just take risk entries at the top here, trying to pick and go aggressive, you probably would be resulting in a quick 1% loss. But because you have applied the rule of 3 and it was a very impulsive leg towards the top of this structure here, wait for a retrace, 15-minute flag. This is obviously the 1 hour time frame, but if you were to go to the 15, this would look very, very nice. I remember this position well, and then you would have been tagged in and it price fell really nicely, and you probably would have been tagged out here or for here. But overall, this is a great example of a good green zone and how to execute applying 1, the green zone, but 2, the rule of 3. Now, as you can see, price moves quite choppy, quite corrective, and then we fall down with an impulsive break. Now, as you can see, we've broken this structure here, so now we are in the amber zone. You can see the amber zone in this one is pretty much all of the middle of the structure to the bottom of this 90% rule here. So overall, any flags in this area are absolutely fine. Again, you just have to understand that there could be larger development at hand here. So you can see we had this steeper flag here, which is still a valid entry. You could have got in at the break, or you could have got in at like something like this. It really depends on your own preference. But overall, that was still a good, valid position, providing that we could have actually formed something like this, which, would have been high probability in my eyes, as that's a evolved push down 3-touch pattern. Look for a risk entry at the top there because it's £1, and then be looking to take that to the short side. But overall, the reduced risk on this flag was still a good, valid position. Now, as price pushes down further, you can see it was quite impulsive, correction, push all the way down. Now, we've achieved this 90% rule. So in order for us to look for patterns in this, that's where you really need to apply the patience. You can see we kind of had this little bit of a 3-touch forming. It hit this override, and some people might have taken this risk entry. And it's important that I show you many different examples. And in this case, this one actually worked out because you would have been tagged in for the risk entry and pushed down. But if you just look at where we are within structure, what is the risk reward here? Well, from the green zone, you can see all of this. And then from the yellow zone, all of this. From the red zone, we have this small amount. So you're going to be pretty much taking a 1% trade in order to make 2% maximum. Really depends on how, and we've already achieved that 90% rule. And like I was saying, this is where a lot of traders can get caught out, because you don't want to be taking a lot of your positions or majority of your positions in this red zone, or even all of them in the amber zone. You want a good mix between the green zone and the amber zone, and very, very little in the red zone if possible. So you can see here, this is why we apply that patience. Again, like I said, this one actually played out depending on how you would have maybe got 1 or 2%, but overall the risk versus reward is what we want to be keeping here. What would be applicable at scale? Now for myself, if I was trading a £1 million account, I would not be comfortable with putting £10,000 on something like this in the red zone. I would be far more comfortable with placing things like this, because that is, I know, is the risk reward is high, the strike rate is high, thus increasing the probability, thus increasing, our emotions, and being able to understand strategies a lot easier. So that's really the euro pound example. I think it's a great example because all three worked out. So technically, if you were to look at purely a results-based perspective, you would think, oh, that's absolutely fine. All three played out. But when you look at overall, you need to be understanding on the longer term scale that, the green and the amber zone is the most important zones that we can be trading in. Now, what I want to do is flick to some live market conditions, as we have some very, very good setups approaching. And I really just wanted to give you guys a quick example of, one, what I would want to see, how to imply the rule of 3, but also where we are within the zones and what I would actually wait for. So if I just quickly go to the daily time frame here on pound dollar, you can see we have very, very clear override. We even have this larger descending channel, so 1, 2, and then 3. So overall, daily is that key inflection point area, which is very, very good for us. Now, what's happening as we approach this structure, and where are we within structure? So we know that we are at good higher time frame value area, but what will we need to see? Okay, so if I was to forecast this, if I was to put this here and we say we come up nicely and it's not impulsive, it's quite corrective, well then we know this is the green zone. We can apply our risk entries. We can apply really anything that we want in this area here. So if I quickly just put this green zone here, I would say anything within this area is, the green zone for myself. So this would be where I'd be looking to take 15-minute continuations and things of that nature. Now, where would I be starting to apply some patience and be looking to maybe possibly take a larger developed flag or something like that, which would be this area just here. So let me just quickly make this amber, as you guys can see now. Where would I want to be applying, I guess, a lot of patience, and in terms of where we are within overall structure? Well, you can see this is where it can get a little tricky, because the red zone in this case is actually not that large in my eyes, and technically we still are at higher time frame perspective. And I think this is very, very important to someone's trading, because they might think, well, this is applicable to all time frames, right? So you might have a shorter bias. These green zone, these amber zones, these red zones are going to be a lot shorter in bias, purely because we are on that 1 hour time frame. If you were to put this on the daily, well, then this entire area here that I'm looking at would be classified as the green zone. But this is why we use multiple time frame analysis and why it's so important, because it's all about where we are within the market on that particular time frame and what are we trading into. Those are the two key things I consistently ask myself. So the green zone, think of trading into no negative confluence. You can see here there is nothing until this level here, and you can see that is why the amber zone is placed here, because now if price was to, let's say, push up, let's say come down here, we didn't get an entry, it comes down here, well, do we just take a flag sitting right here? Well, you can. That's the thing. You definitely can. It's a good, valid position. However, we know that price could start to form these larger corrections, give a falcon flag, and they'll be looking to take an entry as such. But if we were to fall all the way down to this red zone here, and let's say we just gave a nice tight flag, would I want to be taking that? Well, personally, no, because we're sitting right at these lows just here. For myself, it really depends on where you want to draw the structure. You could say the lows is here, or you could say the low is here. For myself, I would want to see a clear impulsive break below this entire area here, and then that would tell me that we have moved away from that negative confluence and there's no need to kind of force anything at the moment, because the market would be much more confirmed. And that's where that green zone can be applied again. Because just to give you guys a larger example, if we were to break out down here, we could get a really tight flag. Would I take that? Probably not. I would be looking at it. I think it would be more of a valid entry. Then if we start to form a really larger falcon flag, well, then now we know we have the green zone again, we have the amber zone, and we have the red zone. So it's applied on all time frames, and it just depends on how you're particularly looking at the market at that time. Now, another example here is EuroCAD, and I think this is a great one. So again, just quickly going to the daily time frame so you guys can see the full perspective here. Really large overall scoop and then push down. So we already have that impulse on the 1 hour time frame, which you guys can see here. And then now we know, okay, so the green zone would have been the overall top of the structure, right? So I'm just going to put this in here. So this would be the larger green zone. And then the amber zone, which is the larger developed flags, is going to be here. And then where would the red zone be? So in this case, for myself, it really depends on how you want to draw the structure, because at the moment, if I just tighten up this amber zone quickly, so at the moment, the red zone for myself and where I would not be wanting to take positions is sitting right at this level here. And the reason for that is because you guys can see we are sitting at the bottom of this correction. Everything is sitting right here. So let me just bring this up a touch. So you can see here, what would I want to see? Well, we know that the first kind of impulse flags and things like that are going to come from this area here. Any push down flag is going to be very good in this area. As you can see, we pushed a little further. We didn't give any flags. Now we started to form this larger expanding, which is pretty common when anything becomes in this amber zone, because we know those larger corrections can play out. And as you can see, it's not always picture perfect like I showed you in that drawing. It does take a lot of skill and experience to understand where we are within structure, but you can see why the reason is the red zone is because of this low just here. If there was no bias here and we would have looked the other way and this impulse back in, 15-minute correction, and there was some higher time frame value, that would be a great long position. So you don't want to be shorting directly into that. If we break all of this red zone here, well, now we have the possibility to form that larger structure, and then we can look for other opportunities. But as you can see, this amber zone, well, now we could push all the way up to this override at the top here, or this larger third touch expanding. But we gave no flags or entries within this green zone, which, sometimes does happen. And this is why the zones are so important, because you can get into a lot of FOMO in this area here because you missed that run, force flags in this area here, take the quick losses, miss those larger expanding flags or larger developed flags, and then price pushes down again, gives another quick flag, and then you've been tagged out. You've taken 2 losses on a pair on 2 particular entries that you probably shouldn't have taken. So that is the benefit of knowing where we are within structure and understanding the zones. Now, one last example I quickly wanted to go over is Kiwi Cat. I think this is a great example as well. So you can see here, daily wise, just mainly focusing on this double top here and then how we approach that structure. So daily, very, very good. And then you can see 1, 2, 3, very, very good structure. It's not perfect. Like I said, there's no real perfect 3 touch here. If you come all the way back here, it is just an overall ascending channel, but you can see the daily is at that good inflection point here. So overall, I like the structure. And again, if I was to just go over this larger term of what I would call, with the zones, I'm just going to put this red zone quite wide so you guys can get a better picture here. So red zone, green zone, and amber zone. Let me just quickly change the colors. And that goes pretty much all that is to do. So you can obviously tighten these up if it was more perfect, but you can see why those zones are. And I think now you guys will have a pretty basic understanding of what this is. Green zone, there's no negative confluence. Amber zone, you can see here, this is where the larger developed flags come. This is where the corrections come. This is where we apply a little bit of patience and let the market show us its hand. Why would we not want to be trading in the red zone in this case? 90% rule sitting right at that area there. We need to wait for price to either push all the way back up, give a great structural approach, maybe for a triple top, something of that nature, or we fully break down and then we can start to look for other patterns and things in that area. But overall, guys, that is the concept of zones. Now, if I just quickly flick back to the good example that we've had here, and you guys will have a much better understanding now. I think you guys, will truly understand why this is so important. And there's something that I really want to encourage you guys to do. Like I said, a lot of my coaching calls are based on, figuring out where we are within structure. And like I always ask people this concept and they think they have a good understanding on it, but I would like to give you guys some homework to do, and that would be to go back over this. We're in August now, so go back through all of 2020's positions and note down where you are within structure. Build out some data in terms of how many trades were taken in the green zone, how many trades were taken in the amber zone, how many trades were taken in the red zone, and figure out where majority of your positions are being taken, but not only where they're being taken, but with what entries. If there's a lot of very aggressive flags, 15-minute flags in the red zone here, well, then that's quite alarming, and I would recommend that you would start to dig deeper and look into that and possibly change that or take that away from your plan. If there's a lot of larger developed 3-touch risk entries in the amber zone, well, that's very, very good. And the green zone is pretty self-applicable. We know that that's where the risk entries and the 15-minute continuations are most likely going to be happening there. But overall, guys, I really hope that you enjoyed this episode on the zones. I hope that you guys get some value from it, and I really hope you enjoy the rest of the series. So on that note, guys, I'll chat to you all soon. Thank you for watching.